This is our Forex blog for October 5th, 2012. And like we do most days, we want to buy the strongest currencies versus the weak. And if the weakest currency is on top, we sell that versus the strongest ones. The real-time trends on the top, this is made up of multiple different tools. Some of them measure the percentage of currencies the Swiss is going up or down against, and the other tools measure the intensity, how far it's moving, per every 2 minutes, 5 minutes, 15 minutes, and so on, compared to the 20-day average for that time. So basically, anytime the Swiss is, let's say right here at 9, is going up against 80 to 100% of pairs, and doing so with average to above average intensity, you're going to see that be at and above the 80 level. Underneath that, I have the 15-minute trend, hourly, daily, weekly, monthly. And the more time frames that line up, the higher the odds of that trend continuing. Also, if you see a pattern like this with a lot of strength, the weekly and monthly trends up, and then you see a little bit of weakness, and it's not nearly as much weakness as the strength, it's very safe to assume that the previous thrust move up will continue because the weekly and monthly trend is so strong in this. So anytime you see that, I like to see an hour to an hour and a half up. This is about an hour up, 30 minutes down. But regardless, this pattern repeats itself frequently. It's a very high, probably 70% winning pattern when you can find one that's the opposite for the weak side. At 9 o'clock, you can see the yen was extremely weak right here. So the Swiss yen, even before 9, was a great one to be looking for buys. Let's put this on here. And there's really two main ways that we trade. One is to wait for a pullback and get into the trend, and the second is for a sideways pullback. This one pretty much took off obviously due to news, and there was really no safe pullbacks after that. Let's take a look at the CAD. Or actually, you can see the yen had mostly momentum to the downside, very minor counter trend strength up. All the longer time frame trends are down, and obviously that's a pattern that you want to continue to trade to the downside. You have an hour or about 45 minutes of weakness here, 15 to 20 minutes of just the tiniest amount of strength. Whenever you see this, you're looking at that currency and anticipating. Remember, anticipating. You're not waiting for a plus 80 or plus 1, or in this case minus 100 move, because now it's been going down for 5, 10, 15, 20 minutes. It might have already gone down 20, 25 pips against many of these currencies. If you get in on it then, you already missed the majority of the move. So again, it's anticipatory. You can see the CAD was strong at this time. This one's weak. This one's still slightly stronger than this one. If the weakness resumes, the CAD yen's going to be a great one to buy. So let's bring up the CAD yen and look at this around the 8:30 time. Let's move this up here. Alright, so looking at this chart, you can see that even before 8:30, the momentum was to the upside, and this one's just kind of been chopping around sideways. This is the previous day's high. It's also a Fibonacci area. I spend 30 or 40 minutes every night doing these so you don't have to. And when it breaks out of there with virtually 100% strength, you want to get in that trend and keep your stop a few pips underneath that bar's low. If this had just gradually broken out, you would put your stop down here, but that's too wide of a stop. You don't want to have a 20 pip stop. You want to take trades where if you're wrong, you're going to lose 6 to 10 pips, and if you're right, you're going to make 15 to 50 or more. So as this thing starts going up, you want to watch the real-time momentum. The upper containment band, oftentimes it's the end of the move. We have the next Fibonacci area here. So I would get out of half my trade here, and obviously my stop is gone to break even very quickly. I want to put my stop underneath here. And a lot of times trades make a move, they either go sideways or pull back, and then they make another move. So if it goes sideways and then up one more time, be quick to get out on the next wave up. Alright, so it's above our upper containment band. It's right next to the second Fibonacci profit target. It's not likely to go above 80.65, so we're out at 80.54. We were in this trade at 80.10 for a huge profit. Let's look at the future. Obviously, this one did go up a little bit more, above our 3.0 band, which 95% of the time this is the end of the move. You get major reversals after that. If you see a currency ever go above that area, you can draw your fibs on there and very safely get into counter trend trades at the next fib level. You might not want to do it when it's at plus 80, but the next time up right here, you can see it's starting to fail. There's a little bit of weakness coming in after an incredible run up. You get short and you can make 25-30 pips on the way down. Currencies that go up this much typically will make a two-wave pullback. Trends can go 3 to 5 waves up, and then you're likely to get a two-wave pullback. So if you do short it up here, hold on to this, 1.382 or 1.618 fib target, and you can see that's pretty much where the down move was over with until it made another wave down in this case. Let's look for some other currencies. The dollar, very weak. Just a tiny amount of strength here. Almost all the time frames are down, not quite as intensely as the yen. And you can see that weakness resumed. Which currency was strong? Well, the CAD was. The Swiss is kind of mixed with a lot of weakness in real time today, so I would kind of avoid that. The New Zealand, you might be watching this one. If as soon as this weakness disappears, you could consider buying the New Zealand dollar. This would be a good time right here at 840 to be looking for a New Zealand dollar buy. Now, unfortunately, the dollar's already been weak for 20 minutes here, so the New Zealand dollar at this time may have already gone down. I like and I prefer seeing a currency like the New Zealand, where most of the time frames are up, the daily's up, the weekly is down, the monthly's kind of mixed. A lot of strength like this from 8:30. There's a little bit of weakness for about 45 minutes, and now it's starting to lessen. That's a trade that's very likely to resume itself. New Zealand dollar around 8:30. And let's look at a 5 pips per bar chart, because there's a lot more trade patterns that show up on range charts. So here's 8:30. You have a 4-bar pullback. Get in this trade. And, a lot of times currencies do not go above the previous high. So if you get in a trade like this one starts to go up, it comes back down. Anytime that happens, I tend to move my stop to break even. It's going up, down. It's not taking out the high. You get out of half your trade there and the other half right there. And you might take a shot one more time when it pulls back, because it really has not broken the previous low here. So the trend is thought to be assumed up. You get long again right here, and it goes up another 15 pips. Can't break that high. So anytime a currency hits a high twice, and especially 3 times, most of the time it's going to reverse after that. And you can, if you watch the New Zealand and the dollar currency meter after 10 right here, you're going to probably see the New Zealand getting weaker, and you can see that weakness here. The dollar, unfortunately, did not remain weak, and it's starting to show some strength. Look, and it continued to, and this continued to. So, you can use the currency meter to anticipate trades. Sometimes they're going to work, like you see the New Zealand dollar did twice, went your way. But watch it, and after, especially from 10 to 11, you can see the New Zealand started to get pretty weak. The dollar, even more so, from 10 to 11, got extremely strong. Now the yen also, which was weak all day, started to show some strength. Currencies don't go one way forever, and that's why we have a lot of tools that help you identify when to look for reversals. Let's look at the New Zealand dollar, for instance. Look where it went. Right to our upper containment bands. And this is one of the reasons why we have these tools. Let's look at the New Zealand yen. When it gets 2 and above, and especially the 2.0 containment band, the 3.0 green one almost always reverses. When it gets above that white band, you can start looking for countertrend. We have many countertrend methods, including range tools that show you how far a currency moves every hour, every 4 hours, and even daily. And the blue level is the high. I'm sorry, the orange level is the high. This is the average hourly high. This currency went significantly above it, about 15 pips. It's very likely to reverse. 4 hours frequently are the maximum higher low. So you can also use, and you can put these charts in hidden layers and look at them. And occasionally, when you're looking at a currency, is it likely to go up? How much farther is the statistical hourly and 4-hour high? One of the things I'm working on is putting this kind of technology in our signals. You can see the orange here is the 4-hour stat high. So anywhere at that level, especially if you start to see the strength subside a little bit, guess what? It's moved statistically too far. It's above our upper containment bands, and the momentum, comparing the New Zealand to all the other pairs, the yens to all the other pairs, it's getting less and less strong. And guess what? That's where it goes down. And when it goes down like this and then goes up, notice the momentum to the downside is higher than the momentum to the upside. Exact opposite previously when you're uptrend. Uptrend shows momentum to the upside. The little down or sideways moves have very little weakness. The trend continues. And that's really the whole reason why we have these statistical trend tools, to help you gauge what direction is it going to go. If it goes up with a lot of momentum, down with very little weakness, and especially in this case, all the longer time frame trends are up, it's likely to continue. But it's not going to, most of the time, and most currencies do not continue indefinitely. They don't just go up 300 pips. They might move up 20 to 30 pips, pull back 15, move up another 15 to 25, pull back, and a lot of times when currencies do not make higher highs, and this one just barely made 5-6 pip higher highs with less momentum, and then it got lower as it's going sideways, it's a perfect reversal pattern. So trade with a trend until it moves statistically too far and the momentum slows down, and then look for reversals. And some days you get counter trend moves up where the daily, weekly, monthly trends down. Those are even higher probability sells at the upper bands, because usually to even much higher percentage times you're going to get reversals in those.